Hello there, Maverick traders. This is Rob Reinhold. It is March 7th. Tomorrow we've got the payrolls report, but let's talk about what happened today. In this session, we're going to talk about the news of the day. We're going to look at the equity markets. We've got another all-time high on our hands. Then we're going to take a look at the market where it is right here, right now. Is there more upside? We'll take a look at all of the market internals. And of course, we're always looking for potential trades, looking for some longs, some shorts, and some sideways.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So checking in on the market today, and what we got was new all-time highs. So we had, again, just what happened last week. We had pullbacks Monday, Tuesday, Wednesday, very, very mild pullbacks. And then Thursday, we got a big rally, just like we got this week. We got the Dow up 0.34%. We had the S&P up 1%. The NASDAQ up 1.5%. And we see that the Russell is still underperforming. Now look, it had a decent day, but it's underperforming everything else. I've got a chart on gold I want to show everyone. Gold is breaking out to all-time highs as well. We'll be talking about the inverse relationship between gold and the US dollar. It's actually quite bullish here for the market. If we take a look at the advanced decline line, we can see that it was a broad market rally. About 70% of all stocks went up. And if we take a look at this, how many stocks are above the 50-day moving average? We're at 66%. About a week and a half ago, we were at 60%, 40%. And I talked about how markets usually get a little bit tired and overbought when it's around 80. Because of that, I said, I think this market rally is going to broaden. And sure enough, the market rally has broadened. You can see we're still only 2/3 of the market is above its 50-day moving average. Let's take a look at the S&P chart, and let's take a look at these all-time highs, and let's see if they came decently on technicals. As you can see here, we've got a breakout. We did close at highs. The question is, have we truly broken out of this area here? I need to see one more candle. I need to see one more green candle, but look, whether we get it or don't, it doesn't change the fact that we are in a +3 bull market. We've been at a +3 for a very long time. There's nothing in this chart, absolutely nothing, that anyone who is serious about technical analysis could say that this is time to sell. Nope, it just is not. So the bull market continues. When will it end? I don't know. When will it end? I don't care. What I care about is, am I going to be participating in it as long as it lasts? And the answer is, yeah. I'm going to be participating in it as long as it lasts. When it finally stops, yeah, it's going to sting a bit. I understand that. But guess what? If you make a whole bunch of money and then get stung a little bit at the end, when the market finally does top out, guess what? You don't care. It doesn't matter because you've got a huge profit that you're sitting on. Here is the chart on gold. Now, this is what's called about a 13-year chart on gold. I wanted to really show you what's happening here. We are getting a really serious breakout. We got one about 2 months ago. This is a monthly chart. So 3 months ago, we got a breakout and then it faded. But you can see when it faded, it just came back to really resistance level, gather some momentum. We're breaking out again. What does this mean exactly? For me, this is more a story about the US dollar. And not just the US dollar, but also about interest rates. We heard from Jay Powell yesterday and today that the Fed is still looking at rate cuts. We heard from the ECB this morning that they are now looking at rate cuts, possibly in June. We have seen all of these central banks have really kind of got on board together saying, hey, the next move in interest rates is likely to be lower. And what that's doing is it's pushing the bond yields lower in anticipation of these cuts. That is very, very bullish stocks. Very bullish stocks. And it's bearish for the US dollar. The US dollar has softened a bit on this news. which is why we've seen gold race higher, because there is an inverse relationship between gold and the US dollar. So if the gold is breaking out, it's telling me the US dollar is likely to go lower. That is very bullish for stocks overall, because if the dollar goes lower, interest rates likely go lower. Again, everything is working in the direction of higher prices for everything. Where was the strength today? Well, it's back in the tech sector. You can see just solid greens here. Google, Meta, big gains here. Amazon, Tesla. Other than that, we did see a little bit of weakness in the large cap financials. Now look, when I say weakness, these have all run up substantially, and they all pull back like 0.5% to 1%. Not that big of a deal. One sector that I really am keeping my eye on, I'm going to talk about this more tomorrow when I do the trading room, is the energy sector. To me, the energy sector and the materials sector looks like the strongest sector at the moment. I think it's ready to have a nice little run. We've already seen a good run in materials, but I think that energy is not far behind. So the question is, did anything change? Not a thing. We're still at a +3. We're at a +1, saying we think the market is going to be up again mildly. And you can see over the past 4 days, this is where we closed on Friday. You can see the first 3 days were weak, but we held in. And here we have a positive run. So the big question is tomorrow. If tomorrow ends up as a positive day, it will definitely be a positive week. And again, this +1 call was a decent call on this. Let's go in and take a look at some potential trades. I've got one bull, one sideways, and one bear for you.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6 and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the apply card in the top left, click apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
I found lots of good bullish setups in pretty much every sector across the market. It was a little bit difficult to think of which one I wanted to share with you. I originally was going to share with you AbbVie making a nice breakout to new highs, but I decided let me go with this one, Kava Group. I've never traded Kava Group before. I had to look it up. They are a restaurant company. Again, it doesn't really matter. You don't need to know any of this stuff. I just did it because I was curious. Oh, a new stock? I've never traded before. What does it do? So you can see we've had a really good uptrend. Even on this gap down in February, it was bought. We ran up. We broke out of this resistance. What was resistance became support. We pulled back. And you can see this stock bounced yesterday. And we've got some follow through here. I like this one to the upside, but I really have to take a look and see, okay, what is my upside potential? This trend line looks like 64 is probably about as bullish I can get on the short term. Now remember, timing is everything in options trading. When you make an options trade, you're not just picking direction, you're also picking duration. So short term, 64. If anyone said, hey, I'm going to be in this trade for, either this Friday or next Friday's expiration, I think 64 is the most bullish you can get on this. So you could look at something like a 61, 63, 61, 64 vertical spread. If you're willing to go out further than that, like out to April, I don't see any reason why this thing doesn't continue in its uptrend. And really, I think you could look at a 60, 65 bull call spread all the way out to April, giving you plenty of time on this one. This one looks like it's got momentum. Looks like it is going to just keep chugging higher. Kava Group, CAVA. On the sideways play, I've been keeping my eye on this one, and I really like the pop-up we got today. I was looking at this one just yesterday for a possible sideways trade. And then today we got this nice gap higher, and it gives me an opportunity to reevaluate this and say, okay, I was looking at this and the 36 to 40. So if I really take a look at the range, I thought it was going to be in 36 to 40. Now I could definitely, yesterday it looked like I wanted to be around the midpoint. As you can see here, we popped up to the top of that range and we had a hammer candle, or sorry, not hammer candle, but a little bit of a shooting star, long upper shadow here. The big question is, did anything change as far as this range? Is this 36 to 40 range still good, or has the sector improved, which it has? Has the stock improved? Yes, it has. But is there any reason for me to think that this is going to make a new bull run? The answer is no. So I want to just kind of put my range up a little bit higher. I'm now looking in the 37 to 42 range. Now that's not going to give me exactly a great strike for butterfly, so I might have to go to the 38.42. Or I could take a look at the 37.41, and that's probably the one I'm going to do, is the 37.41, which means I'm going to be right in the center at 39. So 39 is going to be my midpoint, basically calling this is going to back off a little bit, and it's going to stay in this range between 37 and 40, and most likely be in the middle at 39. So 37, 39, 41 butterfly on FCX. They've got weeklies, so you could take a look at doing this for next Friday or the Friday after on a shorter term trade. And on the short side, this one is Fox. So this is in the broadcasting, and you can see here we broke support. We broke support and we're holding below this level. Yes, today's candle was an up candle. I got no problem with it being an up candle because I'm not looking to be like heavily short in this name. Right now in a plus-3 market, like I don't want to get heavily bearish anything. What I'm really looking for is just something that's going to stay down. I don't want anything that's going to like pop up, just something that's going to stay down, because I can do a lot of stuff with a stock that is just going sideways to lower. One of the things we could take a look at doing is like a 28, 29 vertical spread. That would give you a little bit of a theta positive on this one. Or you could even take a look at doing like a 29, 30. That would definitely be almost all theta. But I'm looking to do the 28, 29 bear call spread or bear put spread. It doesn't matter which one. I think that is the trade. I'm not looking for this thing to do much. I'm just saying I think this is going to stay down here. And if it stays below this breakout point that it just had, I'll be very happy just being in this trade. If it just starts to drift down into the low 28s, anything below 28 is going to be max gain on this week's stock. Let's talk about tomorrow. For any of you doubters out there, the bull market is still intact. I know it was shaky on Monday, shaky on Tuesday, but guess what? It proved to you, guess what? It's not ready to die yet. There's still more gas in it. So we need to be bullish. I put this together right after the market closed, and I went through some of the stocks that had earnings, pretty big ones. So Broadcom is a big semiconductor stock, and that stock is down about 4% after hours. So Broadcom is down after hours. If we take a look at Marvell, MRVL, that stock is down 12%. If we take a look at MDB, MongoDB, that stock is down 10%. Now, yes, a couple of them are up. IoT is up nicely. Costco is trading down pretty significantly, 5%. So we have a lot of negative earnings after the close, which is telling me that tomorrow's open is likely to be lower. So I think we are going to get a gap down tomorrow morning. That being said, we've got payrolls. So think about this. Overnight, we're probably going to be down. I could see the NASDAQ being down 0.5% on the futures overnight. Maybe even getting down to like negative 0.7. Then we're going to go into this payrolls report. And whatever happens in that payrolls report, it's either going to help that out. So let's say the payroll report comes out right as expected or better than expected. Some of that pre-market gap down gets bought up, maybe all the way back up to break even. Probably not, but recovered. Let's say this payrolls report is much, much stronger than expected, which would be bearish, ironically, because it says the Fed is less likely to cut rates. We could see a pretty big down day on Friday. So if you really take a look at Friday's potential now we've got after hours trading, we got the payrolls report. Friday could be a fairly significant down day if the payroll report is much stronger than expected and these earnings continue to look weak. The Nasdaq could be down 1.5%, 2%. That's always difficult on a Friday because we have expiring options positions. Just make sure you are aware of that. Best thing that could happen for most people is that the payrolls report comes out bullish, the gap down, it gets bought up a little bit, and Friday we have a pretty mellow day and we just simply sit around, down a little bit, break even. That would be really nice for a Friday. We may not get that. So going into tomorrow, I think the likelihood of it being another big up day is pretty low at this point. With the after hours earnings, I think it's pretty low at this point. So if you are on, if you have expiring options positions where you need a bullish run, I think it's very prudent to take a look at what you have in the morning and possibly trim those positions. If you say, I need this to run Friday for me to make a bigger profit, I think the likelihood of that happening at this point is fairly low. So let's say you're at break even in the morning and you need a bullish run for your trade to work out. You may want to take that in consideration. But as always, be consistent with your trading. Whatever you do on one, make sure when you're in the same situation the next time, you do the exact same thing that you did this time. That is the market roundup. Thanks for joining me. Goodbye, everybody.